Just 2 years ago, my fiance got a loan for 2.625 interest on a 30-year fixed. I literally believe she got lucky and got the absolute bottom. Now, I'm reading that the average rate is over 7.2% for that exact same loan. If you're like me, you have to be perplexed by this. How is it possible that interest rates can literally triple pretty much, and we see home prices still going up? Now, if you remember about a year and a half ago, I sat there, and I'm not trying to say like, oh, I got it, because I really don't have a clue what's going to happen in the short run on any of these things. But I said, okay, if inflation continues to be strong, it's going to keep home prices up to a certain level. I always draw this example. I go back to 1975. In 1975, the average rate was 9% on homes, and the average house was $32,000. In 1984, the average rate was 13.5%, and the average home was $86,000 or so. So almost tripled, even though rates went up 50%. Now in this situation, what we have currently, let me show you guys what we currently have. In orange is the 30-year interest rate on mortgages going back to 2000. Look at this, guys, right here to right here. Now, this is showing 6.8%. I'm reading other articles that say 7, whatever. The bottom line is it's a lot higher, significantly higher. But look at the interesting part right here. The other graph in purple is U.S. existing home inventory. Look at the previous peak. When we had the bubble back here, this bubble was building all along. This bubble was building. And then when the bubble burst, what happened to inventory? It skyrocketed. What happened to our inventory? It just kept going down from there. Down, down, down. Look at that. The peak was about 4 million units back in 2008, 2009, and we're now down to 1.08 million units of homes available. That inventory is causing people to pay a lot of money for houses. Yesterday I was driving in my east side suburbs of Cleveland, and my future daughter-in-law, she's open to moving to the east side, but not right now. While I was driving, I see a for sale by owner sign on a street that my fiance loves. So I pulled in, I went and looked at it. I was like, oh, it's a beautiful home. It's 3 acres, yada, yada, yada. And then I called and they said, yeah, the price is X. And I said, okay. And I was actually surprised. It seemed a little low. But then the interesting part happened. Hey, do you have any pictures? No, unfortunately, I've been too inundated with phone calls today to put any pictures up. Today, he put a sign up on the street that said for sale by owner, and he got inundated with phone calls that day for people who wanted to see the house. And that's a for sale by owner. That's how bad the inventory is. Remember, guys, we always talk about demand. Whenever I hear real estate people say, oh, go to a city that's growing, blah, 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 but they have to remember the other thing. Supply is an integral part in the whole entire pricing process. Supply and demand curve works together. If we had no demand right now, like right here, when there was no demand for housing because the economy was in the Great Recession, the Great Financial Crisis, things were bad, even though interest rates were okay, interest rates weren't bad, there was still too much inventory out there, home prices plummeted. We saw an absolute skyrocket of interest rates, but we've seen an inventory decrease. What's the big reason for that? Well, let me ask you a question. If your interest rate is 3%, how likely are you to sell today unless you absolutely have to sell? How likely are you to sell unless you absolutely have to sell? You're either being relocated, you have a bigger family, and you're like, listen, we only have a 2-bedroom, we have 2 kids, we need a 3-bedroom home. Something to that effect. That's the only time people are selling now, is when they have downsizing. That's what the house was yesterday. It was an older couple who built the house in 1990. They said, hey, we're just ready to downsize. We don't need this space anymore. It's 4,000 square feet plus a basement. We just need to find a condo. Great. Awesome. We want low maintenance, nothing. So they're going to sell their home now. That's the interesting part. Guys, we're going to have to watch this number right here. We're not going to see any sort of relief off of any sort. I mean, I shouldn't say that. It's going to be hard to see a relief in home price. When I say a relief, I don't mean home prices falling. Remember, until this point right here, The US in general had never seen a year-over-year decline in home prices. Now, were there pockets that had home price decline? Absolutely. But overall, we had not seen a decrease. Why? Inflation was very consistent. And interest rates weren't fluctuating as much as they have right here. I mean, look, in the last 20 years, guys, we've gone from 8.5% down to 3.75, up to 4.9, down to 2.6, up to 6.8. That's some major fluctuation here. Major. That is a lot of activity for 20 years. But we have this to deal with. I remember our good friend Hesh Sagafi, who owns Liberty Home Mortgage here in Cleveland, said to me, Paul, supply is really low. I was like, okay. And he was right. I didn't necessarily believe that was going to be the case, but that is the case. And you have to think about it. It makes sense now that obviously in hindsight, it makes sense. Okay, well, people aren't moving when they have this rate. My fiance and I are doing a house right now. We're finishing a house. She owns her current home that we live in, but we're doing another house. And I always said to her, you're never selling this house. We are renting this house to the day you die, literally, because I look at it saying 2.625, her mortgage is so low. Her everything is so low, she'll be able to make a lot of money off that as a rental and leave it to her kids someday. She's not going to sell that house. But I bet if she did, I bet you'd get a pretty big number for that house. How big? I don't know. She only bought it in 2019. I think we paid $323 for it. And Zillow says $420 or something like that right now, which probably means it's probably even higher than that if you really wanted to sell it. I have no idea. The bottom line is that rate's so low. And I'm just going to stick with that, have it be a rental. She'll generate a couple $1,000s a month in cash flow and be able to put it towards her savings or whatever she wants to do. And that's the big thing. So unless you have to sell, heck, look at this. Heck, I just said heck. When was the last time rates were even this high was the financial crisis. So anybody in this time period right here is seeing on a low, in the last 8 years, they have a mortgage rate that's lower. I think I read some stat the other day that said something like 90% of home mortgages are lower than the current rate. 90%. I actually thought it would have been higher. So this is what I want to explain to people. So if you're new to our channel, I just look at these things. I'm not trying to make predictions about short term. I'm trying to look at it from a long-term perspective. I talk a lot, by the way, I also talk a lot about this on Twitter. So please follow me on Twitter. I'm very active talking about investing, talking about economy. I engage. I really like it a lot. At Paul Gabriel, at Paul Gabriel. Follow me there. And also subscribe to this channel. What we're trying to do here is we're trying to explain everyday things, but in a way that makes sense. Because I think that a lot of people just try to sound too complicated to make themselves sound smart. You don't need to. It's just simple. Now, granted, if you'd asked me to, I would have never thought this would lead to this. But logically, it does make sense now in hindsight saying, okay, well, who's going to move here? Who's going to move? Now, remember, when I talked to my friend Hesh at Liberty Home Mortgage, I said to him, who's taking these mortgages? He's like, Paul, you got to remember, kids leaving college or 25-year-olds who've been renting for a few years, they don't know what 3% interest rates are. They just say, okay, 6.5%, 7%, I just got to pay it. I'm like, oh, you're right. And we've been spoiled by this low interest rate environment. We've been spoiled by this. If you look at historically, for example, the 10-year treasury historically is 4.4%. We're still below that right now. If you look at historical mortgages, I wonder how far back that is, what the interest rates would be. Historically going back 30, 40, 50 years. It's probably not far off from where we are today. It's definitely not down here. That's for sure. And that's what's interesting to me is that we could see such a big increase in interest rates and not see a collapse in home prices. But inflation helped that as well. Why does inflation help that? Two reasons. One, with inflation comes higher incomes, so you can afford more. And two, with inflation comes a higher cost to rebuild a home. So if you're going to look at it and say, okay, well, if I have to build this house for $350,000, I might as well buy an existing one for $315 or $320 and put some money into it, or whatever the numbers might be. Inflation is the friend of real estate. Inflation will have real estate prices go up. If we suddenly had 10% inflation and interest rates went up a little bit more to fight that, you'd still see home prices probably going up a little bit. Now, assuming no big recession happens, etc. But this is the key here. Supply of existing homes. And this is something that has just been going down consistently for quite a while. This is an amazing number. It's down 75% since the financial crisis. Even at the peak of the financial a euphoria right here, it's still down by 50%. That's an incredible number. So again, guys, follow me on Twitter, subscribe to the channel. We like to talk about these things. It's a great way to engage, and leave comments below if you disagree with me or agree with me. I appreciate it either way. Thank you very much for your time.